Hi there, home buyers, bargain hunters out there. Joe Kaiser here again, here to talk to you about a special loan that we have out there that's available to everyone that can qualify, that can help with some of the problems and damages you might see in some of the distressed properties that are available out there. You know, not everything you're going to see is going to be move-in ready. Some are going to have some problems. Like, take a look at this home here, for instance. Just a little bit about this home. Go ahead, pan over here. You'll see on the wall, you've got some major cracks happening over here. Looks like in the basement. I'm in the basement of this home, and the foundation has kind of slumped down, you know, and it's something that could be somebody's worst nightmare if they were taking a look at this for the first time. You can see the fireplace here is at one point it was actually leaning against this whole brick area was leaning out forward, so that was all removed. This whole slab that I'm in down here just sunk down, and it's coming down here. It's almost like being in a fun house, you know. You just go in different directions all the time. But I have here with me Bev Creswell from Ideal Home Loan, and she is our 203k expert. And I want to talk a little bit to Bev about what the 203, the FHA 203k plan loan is all about. And the reason why I'm talking to Bev is she truly is one of the experts in this area. Bev, tell us, how long have you been working with the 203k plan now?
Since 1988.
Wow.
The program first came out. So I was part of the original pilot program. And where you see somebody's worst nightmare, I see somebody else's perfect potential. The 203k loan was designed just for things like this, to help take a property and the customer can purchase it and renovate it all with one loan and get 3.5% down, insured by the federal government.
Wow.
So we can take a house like this that has issues right now that maybe a previous homeowner couldn't deal with or didn't have the funds or whatever. Somebody could come in and purchase this house and include the cost of the renovation, whatever it might be, into the loan itself in addition to the purchase price.
So is that like 2 loans then they're going to get?
No, it's only one.
Wow.
So they can do this, and if there's other things that they wanted to do to this house in addition, I know that there's a deck on the back, a couple of decks as a matter of fact. Then in addition to fixing this piece of it, we could build new decks. They could do some additional renovations in the bathrooms, whatever they wanted to do to it, as long as we don't exceed the loan limits for FHA county loan limits. So this might be a perfect possibility for somebody wanting to come in and get a good deal and then fix it up. It's a great area. It's really a great house if we could just get it back up to par.
Right, right. So what we know in our industry is that, you know, things can be broken with a home, but then it can be made whole again. It just matters of getting the right professionals in here to help us make that whole again. And you've got a good source of professionals that are qualified for this program to help us with this?
We do. We have people around Colorado Springs and throughout the state that we've worked with before as general contractors, and also structural engineers and so forth that could come in and take a look at this and then give us, you know, bids or give the customer bids on getting this property back up. And the rest of the house looks actually pretty good. It's just this backside, and so they could take care of it, pull it back up. And rates right now are still, as we know, at an all-time low. So your rate on something like this right now is going to run about 4 3/8%.
Holy cow!
For 203k, and that's to including, you know, all the renovation and everything. So the rate is still great. It's, you know, 30-year fixed mortgage, and again, they could do it off of the total package at 3.5% down, including the renovation cost.
Wow. So let's see how it would actually work out. They actually could purchase the home, get the loan for it, but then they wouldn't be able to move in because there's work to be done.
Right.
And then now kicks in the construction phase of getting the home fixed up, and then they'd be able to move in, right? So there's some time from the time they close, from the time they actually can move in. We'll have some time depending upon the work. Is that what I'm understanding?
You have up to 6 months to complete the construction with the 203k. And you can build a new house in 6 months, so you can do renovations within 6 months.
Sure.
If the property is uninhabitable, they can build in up to 6 months mortgage payments into the loan, as long as, you know, we have the room within the limitations on everything and they can qualify. So there are some options there too, if they couldn't move in right away, to actually finance, so they're not paying possibly a rent payment and a mortgage payment double.
Great.
In that construction period. So
really?
There are quite a few options and some opportunities with this type of loan and this type of house, quite frankly.
Really? Is there a situation where there's just too much damage for a home? to be fixed with a 203k?
I'm sure there is.
Okay.
But at some point, you know, a bank's still needs to sell a property. I mean,
Right.
you guys specialize in REO properties.
Right.
And if it can't be done, then over time, then obviously the price is gonna come down. Where that point is, or, you know, you're gonna be a better gauge of that than I am, but I haven't had one yet, so to speak, and knock on wood, that it has been so bad that you couldn't fix it. And with the 203k loan, again, you can raise a property down to the original as far as part of the footprint being left and rebuild that property. This doesn't seem to be one of those. I mean, we're dealing with more of the footprint than anything else, but that's another option, that if a property was just so in such bad shape and so distressed,
Right.
that you could take it down to the foundation and rebuild it using a 203k.
How about that, folks? You just build yourself a whole brand new home if it's that bad. Scrape it off. As long as you're using the same initial part of the foundation, you can build off from there, take this loan, and build a brand new house.
Yeah, lots of opportunity, lots of options, lots of things that you can do with this loan that is fairly unknown still at this point in time. So as you see these types of properties, whether it's this one or any other one that is out and about that you're interested in, great neighborhoods like this one, gives you lots of flexibility.
Awesome, awesome, great. Well, I appreciate you coming here and taking a look at the home here with us here this morning, Bev, and giving us some information about the 203k. Folks, this is where you need to be if you're wanting to see a distressed property. Come see the Bargain Home Hunters. Joe Kaiser at Cell State Alliance Realty. Call me at 640-0043. We'll get you into one of these homes to take a look at, and if it's in damage like this and needs some repair, Bev has the great perfect product for you to get it all fixed up in one loan and still with a great interest rate. Thanks again, folks. You have a great day.